Good morning, it's Graham Norris here with EXP Realty, and it's Coffee with Graham time. It's good, it's Friday, June the 12th. We've got to the end of the week again, which is absolutely fabulous. I hope you're doing well. The past couple of days I've talked a little bit about real estate investing. I thought I'd carry on with that with a strategy today that demands a lot of patience, but is very rewarding indeed, and that's tax liens. What is a tax lien? Well, you have tax deeds and you have tax liens. A tax lien is where somebody, a member of the public, can buy a tax lien certificate, and that means what they've paid the tax, the property tax, for the owner of a particular property. So in other words, the owner of the property has not paid the tax for that year, and the tax certificate gets sold at auction. Now, some states are tax deed, where they're actually auctioning the deed because the property owner has been in default for a number of years, and the time has run out, and the deed will get sold at public auction. Winning bidder will actually own the property free and clear. So for pennies on the dollar, basically the owed tax, they can purchase the property. With tax lien, you're paying for the tax each year, so the revenue goes to the city. They receive the revenue they need for the services it provides. After so many years, you then can apply for the deed. The property owner is still in default. For example, I love to invest in Florida. Florida is tax lien. They offer 18% return on your money. So it's absolutely fabulous return. So if there's $1,000 tax owed each year, you'll get $180 in interest if the property owner pays their tax. Now, if they don't after so many years, and typically this is from 3 to 7 years, depending on the city, you could apply then for the tax deed. So essentially, whatever you've paid in, you've paid the tax for 3 years, $3,000, you essentially bought a property for $3,000, and it's free and clear. There are all other liens that may have been placed against the property are wiped out. So you essentially own that property free and clear. The only downside to it is the title is clouded, of course, but you can do something about that. You can see an attorney who specializes in getting titles cleared up for you. They can do that. Or you can sell it as is and declare that it's been bought in a tax sale. And there's plenty of investors around who will buy it and take on the risk and fix it up. And you can make a lot of profit. You can imagine, especially property in Florida. I mean, even if it's a vacant lot, so you can still make a profit. So it's a great way of actually investing your money. I mean, right now you don't get anything in the bank. I mean, the banks are useless, and if you got spare change hanging around, you can buy these tax certificates and get a good return on your money. Remember, they are bid for at a particular time of year, and they bid not on price as typically in an auction. You bid on a percentage, and it bids down. So it works like this. You start at 18% and you work your way down, and it could be in increments of quarter of a percent. And so you might end up with, say, 10%. Still a good return on your money, isn't it? A lot better than a bank. But the idea, the strategy really is to gain property for pennies on the dollar at the end of the day. So that's a really good strategy. If you have any questions about this or want more information, simply put some comments below or call me on 865-405-7947. That's 865-405-7947, and we'll talk to you soon.